Happy Tuesday. Hope everyone had a great Labor Day weekend. Just got a quick market update. Mortgage bonds are actually down about 78 basis points right now, which has already sent rates higher this morning. It's been kind of a bumpy ride. We broke through three levels of support on mortgage bonds, and the 10-year Treasury also broke through that important level of resistance at 3.25. So we are seeing things just kind of run away from us right now. The thing to keep in mind is that this is kind of what we've been predicting since this really started back in May and June. Inflation is the reason that interest rates are so high right now. And until the measures the Fed is taking to bring down inflation or to resolve inflation start to impact the broader economy in a more meaningful way, this is kind of the rate range we're going to be in. And this is the kind of volatility that we're unfortunately going to get used to seeing. We've been predicting kind of the whole time that it's going to be late this year, early into 2023, that we hopefully start to see some of those rate hikes start to have an impact and maybe see pricing come back down a little bit. I will say this for anybody who's holding out for pandemic level interest rates, I don't think they're in the cards. I don't have a crystal ball. All I can do is read the data and read the reviews from people who know how to read the data. And nothing out there is supporting 2.5% and 3% interest rates. So if that's what you're waiting for, you're gonna be waiting a long time. However, we do think and we do hope that as things do get under control, we may see rates hopefully settle somewhere between where they are now and where they were pre-pandemic, which puts them somewhere in the high fours, low fives, somewhere in that area. Again, we don't know. That's what the data supports. That really brings us back to this idea that, we're in this philosophy right now of marry the house and date the rate. And it's not just a clever thing we're saying just to get people to transact right now. There's some thought and there's some logic behind it. We don't always get to pick our entry point into home ownership based on where the mortgage rate environment is. Sometimes we come in when they're a little on the high side and we get to refinance down later in time. Sometimes we come in while they're low, but we need to access the equity in our property later in time, and we end up having to do that at a higher rate of interest. It's normal, it's typical, and it's just kind of the way things go. Now, does this have an impact on initial affordability with rates being a little bit high as far as the cycle goes? Of course it does. Do your homework, be smart, don't ever bite off more than you can chew in terms of a monthly payment. But the reality is, if you're buying into this market, chances are you might be able to bring that down a little bit more. So just keep that in mind. I bought my house in 2019 in March, and I'm on the third mortgage since I bought this house. And my course isn't really a weird or unique one. It's very, very typical. So just understand that most 30-year fixed mortgages are closed off and repaid within 5 to 7 years. Either A, because someone sells that house, or B, because they refinance that loan. Whether they need equity, they want to pay for school or home improvements or debt consolidation, or their interest rate market improves or they want to shorten their term. Who knows? The point is, the mortgage you get right now, you're probably not going to have much longer than 5 to 7 years. With that said, mortgage rates right now, I'm not quoting rates, but just giving you an idea where the market is. Your 30-year fixed conforming, somewhere between 5.99, 6.5 for primary residence, single family home. And then your government loans, your FHA, VA, USDA, those are somewhere right now between 4.99 and about 5%. Again, not quoting rates. If you want a formal rate quote, feel free to reach out to me. I'll get you a loan estimate and give you real numbers. But that's about where the market is right now. If you're a prospective home buyer out there and you're having a hard time navigating this environment, keep two things in mind. One, the media is not your friend. They get paid by clicks and advertising, and the more sensational, the more ostentatious the headline is, the more likely we are to click it. We're all guilty of it. And over the last week, I've been seeing these reports talking about home values being down. And there's a big difference between the median sale price of existing homes for sale versus home appreciation for homes that people own that are not for sale right now. Huge difference. The reality is homes are not depreciating. Home values are not going down. Homes that people own right now are appreciating at a slower rate. That's absolutely true. The data, if you average it all out, probably supports that year over year, we're looking at a 5 to 8% rate of appreciation, which is good. It's indicative of a stable housing market. It's not where we were a year ago. It's not where we were 2 years ago. Those numbers weren't sustainable. So the fact that we're getting to a more sane place of appreciation is a good thing. I don't have a crystal ball. I can't tell you what the future holds, but I can tell you right now the data supports pretty solid appreciation in that 5 to 8% range year over year. And for those of you that live near me in the greater Boston area, we're probably might even see double digits. Who knows? But the point is, the media is there to scare you into clicking something, and that's how they make money. So that's one thing I want you to keep in mind. The second thing is find and trust good professionals. This is not the market to just grab a realtor or a loan officer from wherever. Don't pick your loan officer because he's your old college roommate. Don't pick your realtor because it's your second cousin. Find good people who know what they're doing. If you want help choosing a good professional, give me a call. I'll give you some great interview questions you can ask them. You want a referral? I know some of the best in the business in Mass and Rhode Island. Let me know. I'll refer you to them. But you got to keep in mind that you need good people in your corner that you can trust, who will walk you through your options, take your situation into consideration, and make sure that you have the data you need to make an informed decision. I can't stress how important it is to really trust and have good people in your corner right now. Other than that, that's where we're at. If you have any questions on the market or the rates or mortgages or anything like that, feel free to call me anytime. My number is 401-419-9192. Other than that, hope you all have a great week. Take care.